So, hi friends, once again, very good evening, all of you. Welcome back. So, we are discussing consolidated financial statements. In that AS21, broadly, we have seen and we have solved one comprehensive problem which has so many adjustments so that, it will become a quick revision for us. Now, let us go to the other standards in consolidation. So, I have created these notes. What you're able to see on the screen, consolidated financial statements is 21, 23, and 27. So this is a short summary. This runs into some 30 pages. I'll share this with all of you. So after the class, if you need these notes, just text me on WhatsApp. I'll share this document to you. So 21 we have seen. So let us go to 23. Okay. Let us go to AS21. We have done 27. We'll see. 23. Okay. Where is AS23? Yeah, I think this is AS23. Somewhere we started. Yes. This one. So, Devika, can you start reading this?
Accounting for investment in associate in consolidated financial statements. Scope applies to accounting for investments in associates in the preparation and presentation of consolidated financial statements. Associate, an entity over which an investor has significant influence but not control or joint control.
Okay. So, here they used three words. One is control, second one is joint control, third one is significant influence. Control and joint control, they are simple. The ability to make a decision. So, if you are exercising control, do you know what is the meaning of control? The ability, or we call it power, to make a decision. And whose decision it is? It is not my decision about me. It is my decision about you. I am making a decision for you. For example, Tata Motors, Jaguar Land Rover. Tata Motors is a Indian company. Jaguar Land Rover is a UK-based company. Now Tata Motors acquired Jaguar Land Rover long time back. So Jaguar is subsidiary company of Tata's. Now imagine Jaguar earned 1 million pounds of profit. Can Tata Motors say distribute 100% of the profits as dividend? Tata Motors, Indian company, which is parent. Jaguar Land Rover, which is UK company, this is subsidiary. So my scenario is JLR earned 1 million pounds profit for 2024. Okay. Can Tata Motors ask Jaguar Land Rover exercising its control as a parent, distribute all the profits as dividend? Jaguar Land Rover said, sir, we'll distribute 30% profits as dividend, remaining 70% we'll retain. Tata Motors said, no, 100% distribute. So who will win here? Who will make decision here? Do you think Jaguar Land Rover's 30% will happen finally, or Tata Motors 100% will happen finally? What do you think? Guys, I'm looking at answer in the chat box. Please respond. When you participate, you learn. Obviously, whatever Tata Motors says, that will happen. So who will appoint the directors of Jaguar Land Rover? Tata Motors. Who will remove directors if they don't want? Tata Motors. Who will make operating decisions? We'll enter into this country, we'll enter into this country. Tata Motors. So all the decisions of Jaguar Land Rover are not taken in London, they are taken in Mumbai. They are taken in India. They are taken in the Chamber of Tata Motors Board of Directors, not in Jaguar Land Rover Board of Directors. Now, Pavan sir, is it possible that the holding company gives free hand to subsidiary and says, I'm not controlling you, you are autonomous, you make all your decisions? Possible. Possible. But legally, if I want to exercise control, I can go to any extent. Damn, I will liquidate your company. I am the parent. Isn't it? Control is I can change the name of your company. I can change the registered address of your company. I can change the nature of your business. I can change the country of your operations. I can change the product lines. I can change your strategy. I can change your financing pattern. I can change your capital structure. I can do anything. That is what we call control. This comes normally when you have more than 51% of voting rights. Then only you can pass any resolution, whatever you want. Okay, but when you own shareholding, if it is more than 50% or 51, above 50, say 51, control. What if it is more than 20, or what if it is exactly 50? What if it is exactly 50? Then it is called joint control if in A limited, shareholding pattern is like this. In A limited, shareholding pattern is like this. 50% of shares held by B limited, 50% by B limited, 50% by C limited. Then we say B limited and C limited jointly control A limited. What is the difference between control and joint control? Control means I can make any decision. Now this is a deadlock. That means both B and C want it, it will happen. B wants it, but C doesn't want. It won't happen. B doesn't want, C wants, wouldn't happen. Either it should be yes by both or it should be no by both. So control on A limited can be exercised only by B plus C together. Individually, B cannot do anything. Individually, C cannot do anything. But B can block C, C can block B. I can freeze you. You cannot make any decision without me. But unless I cooperate, you cannot make any decision. Unless you cooperate, I cannot make any decision. Deadlock. Pavan sir, it should be exactly 50-50. Need not be. Need not be. Three parties are there. It can be 1-3, 1-3, 1-3. Four parties, 1/4, 1/4, 1/4, 1/4. Five parties, 20%, 20%, 20%, 20%. Okay, but that is little complex. Keep it aside. Now, Pavan sir, A limited has 100% shares, out of which B limited has 45%, C limited has 55%. Is it control or joint control? Now, in a situation where B limited owns, say, 45%, C limited owns 55%. So C Limited is parent, B Limited is minority without loss of generality. But even in this case, there can be a contractual understanding between B and C that they will hold A Limited, they will exercise joint control on A Limited. So this yellow color shaded area is there, no? Without loss of generality, in general, it is parent company, subsidiary company. So C Limited is parent, B Limited is minority, no doubt. But if there is an agreement between B Limited and C Limited that they will exercise a joint control on A Limited, then you cannot apply AS 21. You have to apply AS 27. For example, I'll give you a classic example. L&T Constructions, GMR Constructions, by way of a contract, entered into a joint venture. A new company, LTGMR, is formed to bid for a flyover or a metro project in Pune. This is for rupees 10,000 crores. L&T looks after planning and construction, GMR labor supply and supervision. Okay. L&T has 45% or 55% shares. GMR has 45% shares. But by way of contract, they jointly control LTGMR irrespective of shareholding. The above percentages are only for distribution of profits. It is not to exercise control. They are not for voting rights. Voting rights, if 100 rights are there, L&T has 50 rights, GMR has 50 rights. But shareholding, if you see, L&T has 55%, GMR 45%. So this percentages will be only for distribution of profits, not for making decisions. Interesting. So if this sentence is not there, straight it will go to AS 21. But because of this single line by way of a contract, both of them are jointly controlling. Because of this, it will go to accounting standard 27, not 21. This is joint control. Now, third important word is significant influence. Significant influence. This I told you the ability. This I told you the ability, the power to make a decision. Significant influence is, this is sharing control with someone else. This is the ability to participate in decision making. I cannot make a decision, but I can participate in decision making. Then it is called significant influence. Something like, control is something like your dad or your mom. They control you. But if you have sibling, whether sibling is elder or younger, they influence your decisions. They may not control your decisions unless it is something like a big sister or big brother. For example, my elder sister, even at my age, at my stage of life, she can make a decision for me and says, Pavan, do this. Because, elder sister always behaves like second mother, isn't it? But normally, siblings can only influence your decisions. They cannot make decisions for you. So when you own more than 20%, but less than When you own more than 50%, this happens. More than 50%, this happens. Exactly 50%. Or contract, this happens. Less than 50, but more than 20. Significant influence happens. This is called associate. Are we clear about the wordings? Control, joint control, significant influence. Are we clear? So when you invest in more than 20% of share capital of another company, you are called the investor company. The other company is called the associate company. When you invest in more than 20% of the shares of another company, you are called investor company. The other company is called the associate company. When you have an associate, you make consolidated financial statements, but you will not follow full consolidation. You will follow something called proportionate consolidation, which is also known as equity method. We follow something called equity method. What is that method? Equity method of consolidation means partial or proportionate consolidation. Partial or proportionate consolidation. So if I own 80% of you, what will I tell? I own you. Of course, 20% of you owned by some XYZ. Doesn't matter. I own you. 20% of you owned by some other person. So I consolidate 100% and I give this 20% in one line item, minority interest. That is how I consolidate. I consolidate 100%. So if you look at, how we added cash balance of holding company and subsidiary company, property, plant and equipment of holding company, subsidiary company. So if A owns 80% of B, if H Limited owns 80% of shares of S Limited, H Limited property, plant and equipment. H Limited property, plant and equipment, 4 lakhs. S Limited property, plant and equipment, 2 lakhs. Now you tell me in consolidated balance sheet, what is PPE? Tell me the answer, please. Is it 6 lakhs or is it 4 lakhs plus 80% of S Limited? Obviously 6 lakhs, dude. Close your eyes. Even if I own 51% of the company, I consolidate 100% figures. No, only you're wrong. It cannot be 5.6 lakhs. Even if I own 51% of your company, I will add 100% of your assets in my assets. I will add 100% of your liabilities in my liabilities. Whatever belongs to minority, that I will show as a separate line item. That is a different story. So I never say I own 80% of you. No, 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 no. I'll not say this. I'll not say this. What I say, I own you. I own you. You are mine. You are my subsidiary company. You are my slave. I own you. 20% minority interest. Doesn't matter because he's minority. He cannot take any decision to impose on me. I know corporate governance and all, but still, at the end of the day, reality. I never say I own 80% of you. I say I own you. Even if I own 51%, I own you. That's it. Full stop. But if I own 25%, I cannot say I own you, but 75% is held by some other person. I cannot say that. That is the difference. If I own 25% of your company, I have to say I own 25%. I cannot say I own you. You'll slap me. With 25%, if I say I own you, you'll slap me. That is the difference. So this is called full consolidation. This is accounting standard 21. In accounting standard 23, we follow proportionate consolidation. We follow proportionate consolidation. This is called equity method. This is called equity method. Simple. A plus B minus C is equal to D. Over. Standard is over. Devika, read this in your mic. What is this?
A plus B minus C is equals to D.
Now, what is A? How much you invested? A is your investment. What is B? What is B? Your share. That means it is your 25% or 30% or 40%, whatever it is, less than 50. Your share of profit of associate company. Your share of profit of associate company. Pawan sir, I invested money, 25% of shares. I invested, I acquired 25% of shares of, say, Unni Limited. Unni Limited earned 1 crore profit. In that 1 crore profit, 25% belongs to me. Simple. C. C is your share, which is again 25% of dividends distributed by associate company. D is equal to your investment to be shown in consolidated balance sheet. That's all. Your investment, add profit. See, it is something like sole trader, okay? Sole trader, you have capital. Add profit, less withdrawals, drawings, closing capital. That's it. Pawan sir, do we have goodwill capital reserve here also? Yes. Majority of the provisions from accounting standard 21, we borrow in accounting standard 23. We'll calculate cost of control, we'll calculate goodwill, we'll calculate capital reserve in case of the reverse A minus B. Same thing we follow. But the accounting is quite simple compared to AS 21. So I have given what is significant influence, power to participate. You are participating in decision making. You cannot make a decision. Associate, an entity in which an investor has significant influence. Okay, normally 20% to 50%. Accounting treatment, important. Devika madam, read this please.
Accounting treatment. Equity method. Investment in associate is initially recorded at cost. The carrying amount is adjusted for the investor's shares of the post-acquisition changes in the associate's net assets. Investor's share of the profit or loss of the associate is recognized in the investor's profit or loss. Dividends received from the associate reduce the carrying amount of the investment.
Continue.
Recognition. Share of losses in the associate is recognized to the extent of the carrying amount of the investment. If an investor's share of losses exceeds the carrying amount, the investment is reduced to zero and recognition of further losses is discontinued unless the investor has incurred obligations or made payments on behalf of the associate.
This is important. Write down in your notes. If an investor's share of losses exceeds the carrying amount, the investment is reduced to zero. Oh my gosh. Sir, what is that? What is that? No. Let me open ICI beautiful study material. AS 23. Can you read question number 1, please?
Illustration 1. A Limited acquires 45% of B Limited shares on April 1, 20x1. The price paid was rupees 15 lakhs. Following are the extracts of balance sheet of B Limited as of 1st April 20x1. Paid up equity share capital rupees 10 lakhs. Securities premium 1 lakh. Reserves and surplus rupees 5 lakhs. B Limited has reported net profits of rupees 3 lakhs and paid dividends of rupees 1 lakh for the year ended 31st March 20x2. Calculate the amount at which the investment in B Limited should be shown in the consolidated balance sheet of A Limited as on 31st March 20x2.
Okay, so how much you invested? 15 lakhs, correct? So what is our equation? Our equation is our accounting equation, A plus B minus C is equal to D. Okay, what is A? Your investment. How much you invested? 15 lakhs, correct? Now, what is the profit earned by the company? 3 lakhs. So whether the whole 3 lakh belongs to you, Devika? Do you own this 3 lakhs?
No, sir.
How much you own?
45%. 45%.
45%, 3 lakhs. Okay, so 45% of 3 lakhs. So you own 1,35,000. Now, the company paid dividend 1 lakh. So will you receive 1 lakh dividend?
1 lakh into 45%.
1 lakh into 45%. That means 45,000. So what is closing investment? Tell me. 15 lakhs, 90,000. That's it. Answer is over. But ICI will not write answer like this. That is a different story. I am giving you the summary. But ICI says, Pavan, you have invested 15 lakhs. Yes, sir. Have you calculated goodwill or capital reserve? No, sir. Then first calculate that also. Okay, sir. So, ये investment कितना है? 15 lakhs. B, net assets of subsidiary company. Okay, share capital how much? 10 lakhs.
Lakhs.
Security premium how much?
1 lakh.
1 lakh. Then
Reserves and surplus 5 lakh.
reserves and surplus 5 lakhs. Huh?
Yes, sir.
Total net assets how much?
16 lakhs.
In this, how much is yours?
45%.
Investor share at 45%. Take this into 45%. How much?
7 lakh 20.
7,20,000 is the benefit you are getting, but how much you invested? 15 lakhs. Crazy, crazy guy you are. See, goodwill or capital reserve?
Goodwill.
Goodwill. कितना है?
7 lakh 80,000.
7,80,000 is goodwill. So in the balance sheet, how you show, you will show 15 lakhs only. Cost of investment is 15 lakhs, but you will split that into two. Investment 7,20,000, goodwill 7,80,000, total 15 lakhs. So how will you show in balance sheet? In the balance sheet, you will show A, investment 7,20,000, B, goodwill 7,80,000, C, total 15 lakhs. Same. Now, Pavan sir, from some concept you jump to another concept, Pavan sir. Yes, I remember. And that jump was intentional. That jump was not losing the track. That jump was intentional. I asked you to highlight some sentence in your notes. In case if there are losses, if the associate company suffers losses. Now, look here. Here, this company earned how much? 3 lakhs. into 45%, 1,35,000 I have added. What if associate company incurred a loss of 1 crore in which 45% is mine? So it will be 15 lakhs positive number and then minus 45 lakhs negative number. Pavan sir, should I show? See, this is the regular scenario where associate is earning profit. If associate is losing money, this plus 1,35,000 will become minus. If it is loss, it will be minus. So if the loss is, say, for example, 10 lakhs, in the 10 lakhs, mine is 45%, 10 lakhs into 45% is 4,50,000. So plus 15 lakhs minus 4,50,000, you can write. But if it is 1 crore, can I write plus 15 lakhs minus 45 lakhs is equal to minus 30 lakhs? Can I write that? The standard says no, put it to 0. If an investor's share of losses, investor, we cannot use the word parent company here because you are not parent, you are only investor. The investor's share of losses exceeds the carrying amount. Carrying amount is 15 lakhs, but your share of loss is 45 lakhs. Then what to do? Write investment to 0. That's it. Further losses, next year also the company lost some money. You don't have any obligation. Write it 0. That's it. Over the next year again loss 0. Next year again loss 0. Next year again loss 0. Next year, if profit comes, then you can start recording again. Then carrying amount is 0 as per my books, plus company earned 2 lakhs profit. In that 45% is mine, plus 90,000 I can add. Unni is saying no question of capital reserve. No, 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 no. That is not capital reserve. Your share of profit, you are going into negative. That is not capital reserve, bro. Come on. Even by mistake, don't ask these kind of things. My heart will cry. How can you carrying amount, bro? Carrying amount 15 lakhs. Your share of loss 45 lakhs. Net figure. So can you say this is your profit? Come on. How come it is capital reserve? Capital reserves are created out of capital profits. Capital reserve is not dustbin. Capital reserves are created out of capital profits. Where is profit here? Capital reserve cannot be balancing figure, bro. Okay. Now, question number 1. Okay. Look here. Investment 15 lakhs. They have taken equity share, security premium, reserves and surplus total 16 lakhs, out of which they calculated 45%, 7,20,000, goodwill 7,80,000. Do you understand this? Question number 1. Do you understand this? Say yes or no. Super. Next equation. 7,20,000 plus 7,80,000. Total investment is 15 lakhs. Add 1,35,000 minus 45,000. Carrying amount of investment 15,90,000. This is what we have done in 1 second. The moment we started the standard, I have given 15,90,000 to you. But this 15 lakhs is broken into 2 parts. One is your investment part. The other one is goodwill part. That's all. Are we done? So, can you read, ma? Devika, read case 1.
Case 1. A Limited holds 22% share of B Limited on 1st April of the year, and following are the relevant information as available on the date. Our cost of investment rupees 33,000 and total equity on the date of acquisition is rupees 2 lakh.
So, in this 2 lakhs, what percentage belongs to you?
22%.
How much it is? Hey, 2 lakhs into 22%, how much?
44,000.
How much you invested?
33,000.
Minus 44,000. So 11,000 is your capital reserve or goodwill?
Capital reserve.
Eh? Andavane, I
Zero.
asked you not, listen, I asked you not to recognize capital reserve when the share of loss exceeds carrying amount of investment. That is a different scenario. I did not say there is no capital reserve in accounting standard 23. In the name of God, don't, write these kind of things. Okay. Like media people, they will write whatever they want. In this situation, there is capital reserve. This is a different situation. Only this is a different situation. That, see, here what we said is, if investors' share of loss exceeds carrying amount, then investment should be reduced to zero. Don't write negative number. Don't write capital reserve. But while calculating cost of control, if capital reserve comes, you'll say that it is capital reserve. Look here, this is capital reserve. Is this clear, Unni? Super. I'm glad you're understanding it. Pado, case 2. Madam, read case 2.
A Limited holds 22% share of B Limited on 1st April of the year, and following are the relevant information as available on the date. Our cost of investment rupees 55,000 and total equity on the date of acquisition is rupees 2 lakhs.
Hold on. Is it goodwill or capital reserve?
Goodwill
How much?
11,000.
All remaining people, Ray, I don't know how to scold in Tamil or Malayalam also. If I know your language, I would have scolded left and right. What remaining people are doing? Are you calculating these things? Okay, how many of you are still alive and breathing? So can you say hi in chat box? So, 3 people are still alive. Oh my gosh. More people. Okay, those who say hello with so many O's, Hello, if you type like that in chat box, you will pass CA enter in this attempt. Now I'll see who all are passing. Shameless idiots. Now people started responding. Chalo, anyway. So we'll see some illustrations. So can you read question number 2, Ma, Devika? This will be our last question for the day.
A Limited acquired 40% share in B Limited on April 1, 20x1 for rupees 10 lakhs. On that date, B Limited had 1 lakh equity shares of rupees 10 each, fully paid, and accumulated profits of rupees 2 lakhs.
Okay,
During
wait,
the year,
hold on. This is the date of acquisition, okay? So how much you own 40%? What is the share capital of the company? 10 lakhs. In that, how much is yours? 40%.
40%.
Okay, then accumulated profits are also there, 2 lakhs. So total 10 lakhs plus 2 lakhs, 12 lakhs is the net worth, net assets. Out of that 12 lakhs, 40% is yours. Is it 4,80,000? Hello. What is your investment?
Is
10 lakhs, 1 lakh.
10 lakhs.
Okay, I should put one more zero. Net assets. your share of net assets is equal to 40 or 45?
40%.
40% of 10 lakhs plus
2
2
lakhs.
lakhs. How much is it?
4 lakh 80.
4,80,000. So is there goodwill? Oi, who's that? Okay. This is the date of acquisition. Now continue.
During the year 20x1, 20x2, B Limited suffered a loss of rupees 10 lakhs. During 20x2, 20x3, loss of rupees 12 lakh 50, and during 20x3, 20x4, again a loss of rupees 5 lakh. Show the extract of consolidated balance sheet of A Limited on all the 4 dates recording the above events.
Do you remember same numbers, same losses in accounting standard 21 also we have a question. But that is 21, same numbers. This is 23. Okay. Now simple. They have complicated it, but let us put it in simple terms. First year, the company suffered a loss of 10 lakhs. So less 40% of 10 lakhs. Okay. This will be year one balance sheet. Year one balance sheet. Okay. So you will show investment plus goodwill, like how I have shown in the previous question, 7,20,000 plus 7,80,000 is equal to 15 lakhs. Like that, you will show here also 4,80,000 plus 5,20,000 is equal to 10 lakhs. 4,80,000 plus 5,20,000, 10 lakhs came minus 4 lakhs. So what will be your carrying amount? First year carrying amount will be 6 lakhs. Okay. Next year, during next year, 12 lakh 50,000 loss, less 40% of 12.5 lakhs. So can you calculate 12.5 lakhs into 40%? How much? Is it 5 lakhs?
5 lakhs.
Okay, 5 lakhs minus 5 lakhs. So how much it will be? Carrying amount?
1 lakh.
Next year, the company again incurred a loss of 5 lakhs. So less 40% of 5 lakhs. How much it is?
2 lakhs.
Don't write 2 lakhs there and carrying amount minus 1 lakh. Write investment to 0. That is what the standard said. You understand it now? This is what the standard is. If an investor's share of losses exceeds the carrying amount, oh my gosh, the investment is reduced to 0. Don't put it in negative number. I'm extremely happy. Students are saying crystal clear now in the chat box. Super. That's all. So if you look at the answer, they said the same thing. Okay, 10 lakhs, reserves and surplus 2 lakhs, total net assets 12 lakhs on the date of acquisition. In that 40% is 4,80,000, cost of investment 10 lakhs, goodwill 5,20,000. This we have done here, goodwill 5,20,000. Next year one, add 480, 520, 10 lakhs. From that minus 4 lakhs, 6 lakhs. First year carrying amount 6 lakhs. This is what we have calculated. After that, take, same numbers they are doing again, and then reduce 5 lakhs, it will come to 1 lakh. That is what we have shown here. Next year, from this 1 lakh, you are not subtracting 2 lakhs. Carrying amount 1 lakh. Loss for the year 2 lakhs, but restricted to carrying amount of investment. That means 1 lakh minus 1 lakh, 0. So that year in balance sheet, you'll write investment in B Limited 0. That's it. So read the answer. You'll understand everything. The standard is over. There are only 2 questions. We have done both the questions. That's it. Guys, any doubt in this standard? We are done with accounting standard 23, whether you like it or you do not like it. Sir, how, sir? How, sir? We look at this side and that side, standard is over, sir. That is good standard. But ICI has given 30 pages, sir. ICI can give, if there is nothing also, they can give 50 pages, but that is a different story. Do